So congratulations to everyone that has been buying the dip and especially not panic selling, right? Because if you panic sold here, obviously you wouldn't have gotten this rebound. But with the S&P hitting all-time highs, I think it's time to make a video update of my thoughts on the S&P and also what sort of strategies I'm using to hedge my portfolio as the S&P hits all-time highs. I think anyone can take a look at this chart and just say, oh, you could have bought this dip, so easy, you know? But this is looking backwards, right? When we look forward, this chart is not drawn out for us yet, right? So in this video, I'm going to talk about three things: my personal thoughts on the S&P, what I'm doing to hedge my portfolio, and the third thing is some call to action that maybe you can use to hedge your own portfolio, right? So with the S&P hitting all-time highs, I think it's time to be more cautious, right? A lot of people will see this and say, oh, it's time to buy, it's time to go all in. Actually, the time to buy was here, not when it's hitting all-time high, right? So the first signal that I want to show you guys is actually the RSI, right? If the RSI hits over 80 or 82, right, I think this is a time for us to be cautious. And it's kind of getting there, right? Because it's at 65, it's just a straight line up from the bottom here. So pay attention to that, right? You can see the past two times when we had an extreme overbought RSI, right? Here is a 5% correction. This is a nothing burger, of course. This is a 10% correction, I think. So let me just check here. Yeah, somewhat like a 10% correction. And if you see a signal like that, maybe you might not want to sell everything or something like that, but you might not want to continue piling in all your money or like thinking is a buy signal, right? Because the price just keeps going up. So when we take a look at the S&P 500, it's actually 1.7 standard deviations above the historical trend, right? And I know a lot of people are going to say, oh, that was 31st March, blah, blah, blah. So yeah, if you take a look at 31st of March, we were somewhere here, right? So we have went from 5,200 to 6,200. So I think the price is maybe like 2 standard deviations against historical trend right now. And when we take a look at the S&P earnings, it's actually 210, right? So this is for 2024, right? So we are using trailing earnings, right? So when we do the math, it's 6,279 divided by 210, right? Obviously, I'm not using the decimal, but basically it comes up to about a 30 times earnings, right? Or 29 times at best, right? So obviously this is quite an expensive price to be paying for the market index, right? Because at 30 times earnings, this is a 3% earnings yield. And then if you have 5% growth, this is only 8%, right? And everyone expects 10 or 12 or 20% from the S&P index, right? So this is only 8%, right? And if you plan according to, let's say, a 12% for your retirement, and then it only comes up to 8%, you'll have a huge shortfall in funds, and also you have to change your lifestyle to accommodate for all these changes, right? So what am I personally doing? I'm actually selling options on a lot of these high volatility stocks, right? And it's not necessarily that I have to have them go down for me to make money, right? So yeah, if they go down, for sure I make money. But if they go sideways, also I make money, right? Something like this. So let's say if Tesla stock goes nowhere, I also make money, right? So what I am selling is basically a call on the Tesla stock, right? So this is me saying that I don't believe Tesla stock will go straight up just like this, right? So this is not something I believe will happen. This is why I'm selling the calls, right? So this is a strategy that I'm personally using. So my last call was this price, right? 330, right? And I really debated about posting about this because I think a lot of people would think I'm a Tesla bear, blah blah blah, and then they dislike the video without listening to my rationale for doing all these things, right? Because I don't have a dedicated Tesla video, of course, and this is not a dedicated Tesla video. I'm just trying to share some of the strategies that I'm using to basically hedge my portfolio and also maybe profit from all these kind of things, right? So if you're dollar cost averaging into the S&P, what should you do, right? Because some people will say, okay, you're talking about individual stocks. I don't really do individual stocks. We're here to talk about the S&P. So something that you can potentially do is when you see an overbought signal, right? I'm not asking you to sell everything, but maybe you can sell some. And again, this is not financial advice. You can sell maybe some like 10%, 15%, you know, to have a cash buffer. Or alternatively, if you have a monthly salary, maybe when you get your monthly salary, you don't instantly deposit it into your whatever brokerage account and just pile it all into the S&P. Maybe you can wait a while, because maybe what will happen is, let's say chop. Maybe this will be what happens. Or maybe it can go like this and then you can buy somewhere here. So these are all scenarios that can play out. So obviously the third scenario can be it goes just straight up, right? Just straight up. But in my view, that is highly unlikely, considering that the S&P is currently trading at like 30 times earnings, right? So that's the hard problem with finance, right? people are telling you basically there are a lot of things that can play out and it's based on probabilities. So people watching might say, oh, if it goes up, if it goes down, if it goes sideways, you're all correct, right? Because you're just talking about probabilities, everything. Yeah, and that's finance, right? Basically, because in my opinion, these are not exact numbers, but I think maybe there's like a 30% chance, let's say a 30% chance that the S&P just continues to go straight up like here. There's a 20% chance that it trends sideways, and then there's a 50% chance that it goes down or for minor correction like this, and then maybe it goes like this, right? So that's what, in my opinion, is likely to happen. So what exactly will happen? No one will know, right? We can only tell after this, right? But you remember that when we were somewhere here, I was telling you I was buying him stock here, I was buying Meta Planet stock here, and these stocks are up significantly, right? So doesn't mean just because I made a few good calls, you should be following my channel or whatever, right? But obviously it would be much appreciated, right? But what I'm trying to say is we can only weigh the risk and reward before the things happen, right? Obviously, there will be some internet shit posters that will say, oh, you know, I can easily buy just right at the bottom, right? I can buy right at the bottom and then I model my returns. Okay, I'm beating your returns. But when they are actually doing the thing, what they will end up doing is they'll just buy at some random place, blah blah blah, and then they don't show you their results, right? So for some reason, everyone that you see on the internet, there are some investing god, they can buy exactly at the bottom, right? But there's 8 billion people on the planet. Let's say we have 2 billion people investing or whatever, right? There is some time that they will buy the bottom and then they'll take it and they post it, and you just presume so many people are doing it. But I can tell you most people are buying like here, 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 here. They're just buying at random places, right? There's no possibility for you to buy the exact bottom every single time, right? That's impossible. So what's my conclusion for this video? My conclusion for this video is some people will expect this to continue, right? And in my opinion, don't expect this to continue and don't be so exuberant, right? Because a lot of people, when they see the news, when they see new all-time highs, they think that's the perfect time to invest, right? But honestly speaking, these periods are where the most money is made, right? We ourselves have experienced this, right? Because we were buying some of the dips here, and obviously we can't get like all our portfolio in right at the exact bottom. But if we have certain sense of what's going to happen, it'll be very good for us to guide our investing philosophy and also understand roughly what's happening, right? We can never fully understand exactly what's happening, and that's what's so tricky about finance, right? So yeah, that's about all I wanted to share in this video. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead and peace out.